What's up, traders? It's your boy Vincent, and today we are going to deal with the losses and the lessons of last month and this month. Now, traders, with that being said, I want to highlight something for you guys. The directional bias of the market is very important. Now, with that being said, beautiful traders, what is next in the market? Now, traders, remember I would count this February buy signal because it ended in March, so it was only a 3-day difference or a 4-day difference, including the weekend. So, with that being said, let's get into this, right? This signal here was 180 pips. This was 13 pips loss. This was 6 pips loss. And this was 128. This was 5 pip loss. This was 7 pips. And this was 128 wins. And this was like 1:3. Let's check it. Let's just to be perfect. 1:3.1. This was 1:3.1 win. This was how many pips? 97. This was 50 something pips. And here this was another loss. Of course, it was 98.70, it was 60, it was 10 pips loss. Okay. Now, what I'm trying to show you traders is the direction of the bias is important, right? Last month in March, we knew the direction was to the upside. Hence, we were able to make this buy signal. We did suffer here because what did we expect? We expected the market to go straight to the top, but it didn't. As soon as it came here, came down again to retest this for the second time. We went in again with the buy and we got our 1:20 here. It was a fantastic setup. We thought because of this break of structure from this level here, we would come here and bounce and go to the upside. What happened? We bounced from these levels. This is what I was trying to show you. Now, when I see this coming down, I don't think now it's time for me to sell. I wait for my perfect entry zone, which in that moment, because we didn't see this one coming, in that moment, this was my perfect entry zone. This was my buy zone. And with this buy zone, I was going to make another 1:20 risk to reward ratio. I want you to pay close attention. Now, since I know that I am biased to the upside, this means that I suffered this with this spike. I didn't see this as 1, 2, 3 also, because the only thing that mattered was the monthly break of structure from the previous month, which this was not. So I tried again, expected, and then I hit 1:20 from this level. And then here comes another one. I I expected to see this go to the upside. Why did I win here and expect another win here? It is because of the directional bias. You keep buying if the monthly and the weekly and the daily and the 4-hour chart says you are in a buy zone. So you find perfect levels for you to buy. And this is why I did. Let me remove, I've written probably too much on this. Now, this is why I suffered. I thought this was a great buy because of this 4-hour candle confirming the buy. I thought this was going to be a great buy to the upside. It looked like it, but it wasn't as I planned. So what happened? I did suffer. And then what's next after this? I knew there was going to be some of this to the downside. And if you go to the lower time frame, you will see why I bought this and lost. We will go to the lower time frames, of course. And then to the upside, this is exactly what I wanted to see. This is exactly what happened. And ever since March, the peace talk, as soon as the fundamentals always are align with the technicals. If they do not align, like right now, this is misalignment in the technicals. Think about it. There was war and the dollar started, the DXY, as you can see, we are dealing with it. It started to shoot up as a safe haven currency. As soon as the war, by the beginning of April, started to end and Trump started to talk about peace talks, he wants peace, everything else started to go to the bottom. So this buy, but the overall structure in here was to the upside. It only came to the downside in here and very earlier in other currency pairs paired with the dollar. But in DXY, only at the end of this week are we confirmed that we are going to the downside. I hope this makes sense to someone else. So with that being said, this simply means we did break even here because at by this time the pound had already changed to the upside. We will analyze the pound. I'm trying to take my time to show you why and how we do lose. It is not impossible for us to lose. We do lose, but what matters is how you lose. Does that make sense? How you lose and why you lose. Sometimes we lose because we follow structure more than anything else. So after this, we did try to enter again to the upside to make that 1:20 to take out this structure and continue with what the bias to the upside, the strength in the dollar. But the peace talks had already begun at this time. So as soon as the peace talk was getting positive, the dollar started falling again. Why? Because we all remember that before this war, the US dollar was suffering very, very much economic wise. That's why traders were selling the dollar. But as soon as the war started, it boosted the dollar because of its safe haven asset. Do you understand? It's not only the US dollar that is a safe haven asset. We're talking about the Swiss franc and together with the gold and the Japanese yen. But in this, because the dollar was highly involved, the dollar benefited more than the all the currency pairs. But if it was more to say a global pandemic like the COVID-19 back in the days, you would see that the US dollar, Japanese yen, the Swiss franc, and gold would be strongly bullish. So the reason why it is bullish only on this currency pair, which is the on the currency which is the DXY, which affected all the dollar pairs, was because of this. The dollar, the US was directly involved with this war, so which gave it this strength, right? Now, what do I expect next? I do think Monday I will do a deeper analysis of this where I cover all time frames. I will cover for our chart, daily chart, weekly chart, and the monthly chart. So for now, what do this is what happened. I didn't, if you even if you can go on yesterday's video, you would know that I was not interested uh, in the DXY or in any of the dollar pairs because all I'm expecting to see is this bounce to here and then a continuation to the downside. This is what we are at. As soon as I saw that both the euro has turned stronger than the dollar, the pound has turned stronger than the dollar, the Canadian dollar turned stronger than the dollar, I was disinterested in trading this to the downside. So if you are only in YouTube and watching me from this level of understanding, this means that you too would have never taken these trades or you would have sold. It depends on what you are doing individually. But if you are one of the registered clients, you would have taken better. And remember, you have to register your trading account with the exclusive XNS link that will be left under the video description. Verify your account details, fund the minimum of $100 or more, and then send proof of registration to me. The link to the Telegram is left right under the video description, so make sure you do not miss that. So let's go back to the charts. Now, this is what I expect to see going into next week and the end of April. There is no buying the dollar for the end of until the end of April, and maybe in May there is no buying the dollar. This has just proven that. Why do I say so? Because this we have breached the monthly break of structure. If this all of this from the beginning of March to the end of March was one big candle, it would have been a strong candle that looks like this. Excuse my drawing. It would have been one big candle that looks like this, and this would have not only the next candle, which is now April, would have already looked like this. And this is a green candle, right? This is a buying candle, and this is a bearish candle. So I'm trying to make it red a little bit so that it can make sense to you. So this simply means what we do have here is we do have a sort of like a bearish engulfing already, because this took 30 days to make this candle, but the following candle only took how many candles to make this? It only took 15 days, because this is today, it's Saturday, and it's the 18th of this month. So it is not even yet closed. By the time this closed, we would be like this to the downside. The best signal coming up is this one to the downside, highest probability move. So we are done with the DXY. Let's go over to the euro and the dollar to see what it has in store for us. So traders, with the euro and the dollar, we are having a similar but different results from the DXY, even though the charts moves inversely correlated. So I have to remind you that we had 31 pips loss on from the beginning of March up until now on DXY, and we had 428 pips of wins. So here in the euro and the dollar, the losses of this month are 92 losses, 92 pips losses, and the wins are 514 in total wins. So let's get into how this happened and why it happened. Of course, I always want to include this signal into March, even though it started in in February. It was the 28th, so it had to overlap up until uh the 2nd of March. So beautiful traders, with that being said, let's get into this. What we did here, it was a good signal to the downside, the biggest signal, which was 260 pips from here. Let me just show you from here. From here, 1.1 1.1816 to 1.1556. This was that 260 pips. So with this followed, and I want you to pay attention on how in the DXY we had fewer losses. We had few losses, and in here we had more losses. So, and what does it mean to the market? So with the euro, we do have fewer losses, and with the DXY, let me just write, excuse my writing, of course, and with the DXY, we had few, but with the euro, we have more. The euro and the dollar is directly and inversely correlated to the strength in the DXY. So when you buy the DXY, you sell the euro, and when you buy the euro, you sell the DXY. It is almost inverse. But what makes the losses increase with euro dollar? Because of more traders joining this currency pair. The market is more volatile than the euro. It might do the same, but the speed and the intensity in which it is doing it has more, it is more than on the DXY. So with that being said, this was the first loss that we suffered on March. I do, when you look at March, we didn't have a great time. So but on paper we did have a fantastic time. So it is the illusion of perception, which goes to what? Risk management, perception of the market. What are you doing on a daily basis to make sure that you are making money? What are you doing on a daily basis to make sure that you are making money? Are you risking enough, or are you just not risking at all? So let's go to the markets. With that being said, this is the first loss. The first loss was 14 pips. Yes, this was 14 pips. And this was the second loss. Mind you, we did enter here and we got out here. And it is 11 pips. We had another whipping, this one from here. You cannot see it so much because of, but you can, let me just, yeah, traders, I'm sorry, my voice is a bit off today. So you can see this one. This was the buy and this is the second trade. So with this one we had a sell, but we get quickly outed out because of this 11 pips loss. So with this 11 pip loss that we are currently having here, it was followed by a win. This win was 1:11. It couldn't reach our 1:20. So what happened was, from this sell, as soon as we got to 1:18, we did put break even here, and it came out, hit the break even, and we told ourselves that since we did have this new low from this, we have this new low, this would be a great place to look for selling opportunities again. We did enter here, we did suffer a loss of 18 pips from this signal. Okay, and then we did enter again, we did suffer 12 pips from this signal, right? And we did enter again because why? We were focusing only on selling because of the strength that came in here that made us, how much did it, I didn't even mention this was how much. Let me see, one is to, I have to recall, I have to check this on my books. Oh, this was 162 pips from this level right here, which is 1.164 to 1.1488. This was 162 pips. So from this was the win that we did have, but it was not enough, which is why we were biased so much to the downside, because we still haven't reached that 1:20, and we were expecting to see that 1:20 come to play, but the structure was not having it. So with that being said, let's get into the markets again. Now, after this 12 pip loss, we did have another 6 pip loss coming here because of why we were still bearish to the downside, and we almost hit 1:20, and we thought after the spike the market would go to the downside, but instead market just continued to go up. We thought again this would give us a chance. Why did we think this? Did we think so? Let me just remove this. Why did we think so? Because of this. We were expecting to see the markets never going above this, and it struggled a lot. As you can see, more spikes coming down to this. We got stuck out again with 7 pips now on this signal, and we got another loss here, and we got a sell. This sell was good because why? It broke this low and it gave us inside this. If a wave goes like this and it keeps on making higher highs and higher lows, and something like this happens, we know that this is going to happen to the downside. This is pure skill. This is written in the books on price action, right? So when this happened, we thought this is, after this long, we still haven't broken the high, and we do have this would be a great place to go to the downside. So, or sometimes it can even go up here and then go to the downside very strong because of the liquidity that will be grabbed with this wave going to the upside. So traders, with after that, we did have another strong momentum to the upside, which, but before this signal, we did put break even here because we thought if it come here, we would look for another sell to go to the downside. Instead, we had a strong momentum to the upside up until the month end. So what does that mean to us? This means we had a win, and this win was not big, as you can see. Let's see how much ratio was that. This was 1 is to 7.93. This was not much of a win to us. So after that, this was 92 pips. This was 92 pips. So after having this plus 92 pips here, we went up, we entered again. And after entering again, we did have a 11 pip loss from this. We could have done better from this level. We could have done much better, and we didn't let this one, we didn't break this one, as we have broken even on the DXY with the same trade to the downside. We have broken even and we got 1 is to 3, but in here we didn't. So this came down, or I didn't, because most of the traders in the real account traders community, they act independently, they follow the trades, but how they regulate and manage the trade, some of them they do it independently. So it was that in it was like that in the real account traders community. Some did put this, but if I didn't tell them to break even, so some will not break even, or even put the stop loss, trail the stop loss to this level. So after that, we did have another strong momentum to this. And after this, we did mention that the pound had already reached this price in with the pound on during the week. So with that being said, this was, I thought, why didn't I buy as soon as I saw the pound reaching the break of structure with this wave to the upside? Because I was not bullish on the pound and the dollar. I was bearish, so I had to wait and see what the market does. For me, the patience is into waiting. So another loss came in because I thought this was like liquidity grab from what the monthly scale, even though this one looked like this. And then this, as soon as this happened, this right here is this happening here. And as soon as this came up to break this, which is to break this lower high, which is this lower high here, I could have taken this as a buy opportunity to go for buying, but my analysis did not allow me. The monthly break of structure was still in this play very much up until we had reached it, and it looks like we are now setting up for that pullback that we were talking about to retest from this level and go to the upside. So that is it with this. This is what I'm expecting now. I'm expecting to see this bounce and then a continuation to the upside. I'm expecting to see either this hit here or here and then a continuation to the upside. This would be a great and a fantastic place to go look for opportunities and hold that buy to the upside. Now, this month, the beginning of the first half of March was great. The second part of March, we've been having a stronger momentum to the weakness of the dollar, which is symbolized here. So for now, we are, of course, into this. We are into this. This is the highest probability move because everything is aligned. The monthly time frame is aligned, the weekly time frame, the daily, the 4 hour, all the time frames are aligned. So what we are waiting for is a pullback and this continuation to the upside on the euro and the dollar. And the lesson into this was, for me, I could have not traded as soon as we did have this, but I did take this. Other than that, all these losses I do not regret. Why do I not regret? Because they are part of my strategy. If I start changing how I lose, I start losing how I win. Does that make sense? If you start changing how you lose, you start losing how you win. Because as soon as you say I shouldn't have, I would have, I much rather have bought here. This means and next time when the market is aligned, you are going to go against the alignment, and that is very catastrophic. You don't want to be against that. So let me remind you: 1, 2, 3 wins. They are all equal to, no, it can be 3 wins. 1, 2, 3. Which one did I miss? Let's go to the lower time frames. I have to confirm everything clearly, because one thing about me is that I value more transparency than anything else. So this would probably make me see what. Oh, okay. Yes. There are okay. There are only 3. There are only 3. I didn't see that this was the total. So after this 1, 2, and 3 wins, which resulted into 290, 162 pips, and 92 pips. This 1, 2, 3 signals gave us 514 total. And how many losses did we have? 1, 2, 3, 4, 5, 6, 7, 8, 8 losses. 8 losses, 3 wins in the month. That means for someone else who's not following risk management and doesn't know how to multiply their money, that's a loss. That's a bad month. So the losses all the eight losses all equal to 92 pips. The 3 wins all equal to 514 pips. Now that is the best system that you can use, because even after losing 10 times, you can have 1 win that blows all the losses away and still give you profit. If you're not part of the group like that, man, you are having problems and you need to join right now. So this is the DXY, and I've already told you what I would like to see. Not the DXY rather, but the euro and the dollar. So this is what I would like to see in 10. So let's go to the pound and the dollar to see what it already has in store for us and see where we can profit and learn. So the lesson in here was this loss. It was already out because the pound had already reached the monthly break of structure. But sometimes one pair do reach the monthly break of structure and then goes back the to the analysis, go back to the alignment of the analysis. It does happen. So I thought this was the case, but I should have taken this one as a cautious to the outside. So this is the lesson that we do have here. We will see how it multiplies throughout the other currency pairs that are remaining. So for now, we are going to the pound and the dollar. So with the pound and the dollar, what we expected, or what did we get? This is one win, the first month, or that win that usually started from the last day of April, which really made 148 pips. Let's see. Yep, yeah, this really made 148 pips for us. And then we go again. One thing you have to see and understand, even with any mentors, they can give you 60 signals, 40 losses, 20 wins, right? And by the time some of you don't even get to the 40 losses, the problem is not them. The problem is you and risk management. You don't know how to manage risk. So that in turn makes you a bad trader, because you just risk without proper risk management. So let me just say this again. This was after this win, we had the second loss. How many? The first loss, which is 13 pips. We had 148 wins gained from this. We had 13 pips from this. And as we go again, we had 17 pips from this as a loss, not a win, because we entered here, but we got out of this from this level. We had another loss followed here, which is 15 pips. And we had a win here, which is 203 pips. This is a review of what happened. This was the win of 203, which came from 1.3472 to 1.3368, no, to 1.3269. This is the take profit, this is the entry, and we did exactly that, 1:20. What does this mean? If you've won 1:20 here, that means if you were risking $1 per trade, you made $20 here. You lost one, two, $3, you made $20 here. Do you see where this is going? But this, you have to think this in terms of percentages, not the actual money. I don't prefer to trade around with real money or risk money, but I would rather risk it in percentages. It makes more money, it preserves more money when you're losing. So we are going deeper into the month of March, what truly happened in March up until right now. So after this win of 203 pips, we had this signal again, a sell signal to the downside, right? This was, let's see, this was 10 pips, right? And then after this 10 pips, what did we do? We had another loss right here, 8 pips. And after this, we entered here. We didn't reach the target. Remember, if you are paying close attention or if you are enlightened enough in trading, you would understand that this wave was or you can just go back to the euro and the dollar and check that the wave that I was talking about that made me lose many times because I was expecting it not to be invalidated, but it got invalidated. It is the same wave as this one. So I got in here, break even to here, and 1:8.26. It is better than nothing, especially when you had a strong momentum to the downside, but nothing really happened to show that this is going to maintain the course of the buy or of the sell in this scenario, right? So we're going again, and this is what I was talking about. A sell went in again, the last sell here, which is 14 pips. After this, okay, I didn't mention how many pips this was. Thank you for showing me that. I, this was 174 pips from here to make that 1:8, right? And I still haven't calculated the total I see here. Let me calculate the total first. For me, this let's calculate it together. This would be better if we do calculate it together. So this is 148 pips, win 148 plus, we are calculating the wins first and we calculate the losses after. So the second win which came out at this was no, please. The second sell that came out here was, which is this one, it made 203. So this is 148 plus 203. We are calculating the pips plus 174, which is this one, the last win that we had, which is 174 plus 174, which equals to 512, right? 512 pips. This is 512 pips, right? And the losses, of course, for that matter, we did have uh 13, 17, 15, 10, and 14 and 11. So let's calculate that. It's 10 plus 11 plus 14 plus 15 plus 17 plus 13. We had 80 pips loss in pound. We had 80 pips loss in pound, but the wins was 512. Now, let's come to the lesson that you have to learn on this. Remember this bullish momentum to the upside. It has already reached the monthly break of structure of the pound and the dollar right here, signaling that the pound is very strong to the upside, right? Why didn't I sell here like I sold in the euro, like I sold in the DXY? Because here this showed us that whatever it is that I was doing, trying to sell, it's no longer active. So what I was waiting for is this, and then I would have sold here to continue to the downside. But the confirmation was it went up to make sure that we do have a clear break of the monthly change of structure to the upside. So this means that after this, we are going to the downside, retest this, and then a continuation to the upside. Remember, this analysis will be updated on Monday with the deep dive analysis that we do, where we cover all the time frames from monthly, weekly, daily, and the 4-hour chart. So here are wins. We do have, how many wins did we have? One, two, three. We had 3 wins also with the pound and the dollar, right? We had how many losses in here? One, two, three, four, five, 6 losses. We had 6 losses on the pound and the dollar, of course, and we had 3 wins. But the losses pips, the pips that we lost are 80 pips, and the pips that were won were 512. That just shows you the power of this real account traders community. So the losses are 80 pips, but the wins are 512. That shows you the power of the real account traders community, the power of this strategy, and the power of risk management. You have to be smart enough to know when to risk and when not to risk, right? So with that being said, traders, this is going to be, I'm not discussing all the pairs, the pound and the NZD, the Japanese yen and the Canadian dollar and the Japanese yen. I don't want to discuss that. I'm only discussing the free YouTube watch list so that you can keep up to date what truly trading is, not the fluff that you see there with people making screenshots of 60,000 trades on one single pair. They're not getting anywhere. I'm telling you that much. So with that being said, we are going now to the US dollar and the Japanese yen to see what happened. And with the US dollar and the Japanese yen, there are truly no lessons here. We've just kept the clean sheet, so I will just read through this, how many pips we made. There are no lessons, of course, on this. We've won every single trade that we can do from March. Why? Because we had a difficult February with this. It was the change of structure. It happened on February, so on March was a follow-up. And right now we do have a weird change of style. That's why we do have these small wins here. So firstly, let's discuss why we did win these signals, right? We won the signals because the market was like this. This we will thrive in a market like this. We will make millions in a market like this. So it happens very few times, in in this business. So imagine buy, pull back, buy, pull back, buy. This is what happened. Strong buy, pull back, 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 buy. But now we have had this quite some times where we've realized that not only does the wave liquidity and the monthly liquidity are in constant battle with the 14-day liquidity. Everything is about to change with this 14-day liquidity. And I think from this going deeper into April and into the end of, into May, we might start to see this go to the downside. This is the best setup that is going to happen, or that we are expecting, to the downside. So traders, this was just a fantastic clean win. There are no lessons here. The lessons is what lesson are you learning from wins? You learn nothing from wins. You learn everything from the losses. As a matter of fact, if I was someone else, I would have gotten, arrogant, started placing multiple wins, multiple trades here, trying to show that this can go up. But I'm not arrogant. I've had years of trading, and the market has humbled me enough to know that I never know anything. All I have to do is follow my rules, the rules that I've made, and I will make money. So this is the buy to the upside. Came back down, break even. You can check even this signal it was given on this week's daily analysis. Even here, the buy came up, couldn't go to the upside, gave us small profit. What does this mean? We got small profit once, we got small profit and even smaller profit from this second wave of the signal. This means the profits are shortening. We are going to change structure to the downside, as we have indicated on with other dollar pairs. So I don't want to waste time in this. The rest will be covered on this weekly forex forecast. So let's just go straight to the last but not least, the US dollar and the Canadian dollar. And last but not least, which is the US dollar and the Canadian dollar. Very simply put, the first time we did try this, we were trying to buy from the previous month, but it was not successful. So this month came up, and this, you see that these are not equal. There's a higher one and there's a shorter one. The shorter one, we did suffer 7 pips loss from this, and then the second one, which is this one, the taller one, it suffered 9 pips, and the much taller one, we did suffer 15 pips, and this one we had 12 pips. Before anything else, we did take this one out, of course, and this was 162 pips. This was a good win because we have been proving all this time that this would go to the upside. That's why we bought this many times before we got the right setup here. And secondly, we did have 200 pips with this one to the upside, right? And with, excuse me, and with these two, we do have 362 pips. Only this one and this one, right? And then we had 2 more last losses. And if you're paying close attention from the beginning of April, I said I would not trade this up until it reaches this or this, which it did. After this, we did take the buy to the downside, but it was weird. So when the gap opened, all I wanted to see was a retest, and then the continuation didn't have any continuation, just went straight through. We thought this was the wave liquidity, bought again as soon as I got confirmation, but we suffered. So here we did suffer 8 pips and 7 pips. So this was 362. Let's calculate the losses first. The losses would imply that we have 7 plus 8 plus 12 plus 15 plus 9 plus 7, which is 58 pips. We suffered 58 pips on the losses and got 362 on the winners. Mind you, we got only 2 wins, and we have 1, 2, 3, 4, 5, 6, 7, 6 losses. It was 3, and then it's 3, yeah. 6 losses. We did suffer 6 losses. We had 2 wins, but the overall pip lost is 58 in losses of pips. Let me just put an L here and the W here because we won twice, and the pips that we had was 302 62. Do you see why it is important to join Real Account Traders community, a community where if you are having an emotional imbalance at that moment, you want to close a trade, I'll be there to tell you, calm down, because one win can wipe away everything else. So with that being said, traders, thanks for watching this video. I know you believe in me. Make sure you like, you subscribe, you don't miss these videos, and tell someone who you think should know about this. From me, Vin Boss, and the rest of my crew, bye bye.